So I just want to say thank you so much for all of you guys to join in today's webinar. And just want to go ahead and do a quick brief introduction about what Crowdcreate really is. So what we are is that we are a lead gen service agency where we help out companies get connected with investors and thought leaders. So I want to go ahead and introduce myself really quick. My name is Eddie Finegra. I'm one of the BDRs here at Crowdcreate. And I want to go ahead and kick off the stage with Will Walker over here.
Well, that's fine. Thanks, Eddie, for the intro. Anyway, I'm head of business development, Crowdcreate. Most of you guys know me, or maybe you don't, but I have a long private equity I'm a private equity background and veteran, and worked with Crowdcreate for almost 2 years now. And I couldn't beat them, so I joined them. I guess is always my phrase when I was trying to get deals funded and meet the right strategic growth strategies for different projects and companies. And so that's where, like I say, I couldn't beat them. I joined them. That's me. And welcome, everybody. We expect this to grow and be an ongoing webinar series with different themes. This one's real estate and certainly has some OZ pros in it. See, I get a quick plug in there for you, Jimmy, and Ashley, but also we're going to be doing one next week in blockchain and gaming, just to give you an idea, because many of you guys, even though you're real estate gurus, may have some other interests or other thoughts. We'd love to have you continue to join us in some other expanding themes as well as this one. So I'm going to throw it over to Jeff right here, but we're glad to have everybody, and I know we're going to share some great thoughts and resources. Jeff?
Thanks, Will. Jeff here, one of the co-founders here of Crowdcreate, and really the purpose of this is just a community-driven event, just to introduce other people in the space. If you look around the room, there's a lot of top thought leaders here, podcasters, good friends. Myself and Mike, we're both based in Orange County, and we're buddies. And he's working on a great real estate project. You might have seen him on Bravo's, real estate TV shows, and really the purpose of this is just to bring everybody together, kind of share what you're working on. If there's any challenges that hopefully somebody here can, help. There's a lot of good people here, and good friends that can call them through the years. So yeah. Does someone want to start off? Jimmy Atkinson.
Oh man, I was worried you were going to call on me first. I don't have anybody to copy off of. So I guess I'm just going to set the tone here early. Well, anyways, thank you, Will, and thank you, Jeffrey, for hosting the event today. Really glad to see so many great podcasters on the call. I don't know how Ashley got in here, but we'll deal with him later, I guess. But a quick introduction. I'm Jimmy Atkinson. I'm founder of the Opportunity Zones database at opportunitydb.com. It's one of the web's leading resources on opportunity zones and how to do opportunity zones, really. And associated with that media entity is my podcast, the Opportunity Zones podcast, which kind of serves as my front porch or my top of funnel for people who want to learn a little bit more about opportunity zones. And then where I go from there is I funnel them into, if they're an investor, I can kind of match them up with different fund issuers or people who are seeking capital. That's where Crowdcreate comes in sometimes. And other times they are looking to start their own private equity real estate fund or opportunity zone fund. And that's when I kind of funnel them into my other business, which is OZ Pros. That's our consulting service that I co-founded with Ashley Tison about a year ago. So that's why he's here. Jeffrey, does that do it there? Or did you need anything else from me? I wasn't sure what the format was exactly.
Yeah, specifically, what are you working on right now that you're really excited about?
Oh, okay, good. Right now I'm working on my OZ Pitch Day 2020 event. It's serving as a one-day online opportunity zone matchmaking event where I'm going to matchmake opportunity zone investors with capital gains on one side and opportunity zone fund issuers on the other side, who will have the opportunity to present their OZ deals and funds to the group of investors that I'm gathering. So that's happening on November 17th. So I'm full steam ahead currently at the moment, promoting that, getting investors to register and signing up fund issuers to partner with me on the event.
Awesome. Great, Jimmy. Good job.
Thanks, Jimmy.
Well, let's move to your right. Let's go right into Michael, if that's okay, Jeff. I'm anxious to get to know him more myself since he's a TV star.
All right. Thank you, Will, and thanks, Jeff, for inviting us to speak to your group today. As Jeff kind of already mentioned, we're a startup. We are already in several markets. We're based out of California, Southern California, Irvine to be specific. But I guess if I could just go into it, imagine a homeowner or real estate agent that's trying to sell a home that's been lived in for 10, 20, 30 years. As you can imagine, that home definitely has deferred maintenance issues, maybe some outdated design, and is not in the best position to sell for top dollar in today's market. So my name again is Michael Alladawi. I'm one of the co-founders and CEO of Revive. I flipped and built over 300 homes in Southern California, and I want to remove the flipper out of the equation. Revive is a real estate concierge company for homeowners and real estate agents. Our goal is to help homeowners maximize the value of their home by covering the upfront costs of pre-sale home renovations and much more. We do this by giving homeowners access to our money, our expertise, and our vetted service providers. So in a nutshell, that's what our company is and does. By the way, my co-founder, Dileep's on the line. He brings a tech background. Dileep, do you want to just tell him a little bit about your background before I go into what's exciting to us in the real estate space?
Sure. Hey guys. Yeah. So I'm on the tech side of Revive. Thanks for having us on the Mastermind. I'm tech driven, new to real estate. Actually, I've built over like 100 apps. Was a founding team member of an engineering studio here in California, which got acquired. I was also the interim CTO for Rich Uncles. And so, yeah, with our vision of this real estate concierge, we're trying to stay innovative and tech centric on how we kind of deliver this digitally to like homeowners and realtors across the nation.
Yeah, what's exciting is we've been able to, add a tremendous amount of value to real estate brokerages, agents, and homeowners. A lot of real estate brokerages are using us to recruit, retain, and affect their bottom line. I think that going into kind of the second question that we wanted to cover is, what's going on in the real estate space and industry in general. As you guys kind of, anybody in the real estate space knows, the real estate industry has experiencing a tremendous growth spurt of, innovation and disruption. Some of it is, aimed to, marginalize certain existing platforms or even real estate agents. But what's most exciting to me is that there is a lot of good evolution and good companies out there that have products that are really all aimed at making the process better and ultimately giving the most flexibility and tools to homeowners. And I think real estate agents today, if they are able to adapt, and I think we see that agents are adapting and they must adapt to survive, they could use those tools to help their clients and kind of cement and keep the value that they need to deliver to their clients. So, I mean, I'm talking about the iBuyers, the trade-in, the different concierge formulas, you name it. There's so many new companies in the space helping homeowners, tap into their equity, help them through the sales transaction, all streamlining it. So we're really excited to be part of the evolution for the real estate transaction. We would like to, help real estate agents pivot and ultimately homeowners maximize the value of their home, as we kind of stated.
Oh, that's great.
Selling a home, I'll end with this, and this is kind of the last question that was posed is, what are we looking to, what could you help us with as influencers and people in the space? As selling a home is a major event in people's lives, and oftentimes it's their biggest investment. And we want to create awareness to agents and homeowners across the nation that there are these tools out there that are designed to really ultimately benefit them. And so if that's something that anybody here could help us with getting the word out, I think that's our primary focus today is what
Okay.
we're doing.
Great, Michael. I just want to say that's, I think you're well positioned for whatever the next cycle or mature cycle is having right now, both in single family and other real estate properties. So sounds like a good timing on both you and both Michael's parts here. So
Yeah,
interesting.
I
Thanks
think
for that.
I think the business will get better. You know, right now it's maybe to a lot of people's surprise, you know, they thought COVID was going to come in and wipe out the real estate market. And in fact, it's now ignited it. And, you know, it's a seller's market today. And you could imagine that is kind of the time that you maybe need the least need for someone to come in and give you some advice and you know, front some money and expertise to help sell your home when homes are flying off the shelf. So having said that, we are seeing we have great you know, we still have great penetration, but we, as to your point, see that only getting better as the market shifts in the next year.
Sure, absolutely. Well, thank you for that. Great job. Who's our next contestant here? Moving right along. Eddie, who's next on the hit parade that we have up? I think we've got Ashley
Mike
Tison, don't we?
Stohler.
Oh, Mike Stohler. Mike, why don't you take it away and tell us about yourself, your project, and something you're working on that we could learn.
Sure. How's it going, everybody? My wife and I have a very unique podcast. It's called The Richer Geek. And I know Jake and Gino, we've been on theirs, and Nicole's had Jake and Gino on ours. And what we do is we take the concept that the regular 9-to-5 person that's out there working, they think that all they have is their 401k, their IRA, stock market, mutual funds. They don't go outside of that little corporate box. So we bring people that are in the tech industry and other different industries. And these people have started their own business. They own multifamily, they own hotels, they own convenience stores down the street, they own fitness centers. And it's really getting people to say, wow, you know, think outside the box, that I can actually go, whether they want to invest passively or actively, go out and do something outside of their own corporate nest egg. And it's been very popular, very successful. On the real estate side, my wife is in tech sales. That's why, you know, she calls it the Richer Geek. I am on the real estate side, and in the Phoenix market, what we did is we started with a fourplex 7 years ago and went from a fourplex to several hotels
Wow.
in 7 years. And now it's we're having a lot of fun with COVID in the hotel space, but it's gone very well. It's really got us thinking about what type of hotels doing well during this pandemic. Where are those hotels located? Why are the ones that are failing, why are they failing? And we're positioning ourselves, we're getting ready to open up a fund so that we can get ready to pounce in the next 2 to 3 months, especially the hotels with the CMBS loans, which are the ones really getting hurt right now because there's no deferment type of application with the security type loan. So we're getting ready to do a fund, and we're going to go in with some high cash and get these assets. And a lot of them are 10% down, and you can actually assume the loan on a hotel. So we're preparing ourselves and positioning ourselves for when that happens. We're going to sit there and pounce.
That's excellent.
Another thing that we're doing is a lot of people aren't traveling right now, especially via airline. Did you know that the RV ownership's up 200 and some % just in the first 6 months of this year? So we're looking at we're doing a feasibility study. We're opening up and planning on building a luxury RV storage, and we're going to be doing a fund for that. All these people, they went out, bought these RVs, and now they don't have anywhere to park them. So there's going to be some real nice, it's going to have dump stations, wash stations, storage, and they're all going to be covered. So it's going
So Mike, I actually have a funding source that that's got committed capital and raised money. If you'd be interested in having kind of your, I guess your first in, if you'd like, you know, they're going to obviously want better terms than a retail investor, but they got money already raised for exactly that product.
Yeah, perfect.
Wow, a winner already. See, Mike, keep going.
See, the mastermind's working.
Yeah,
There
these
it is.
Hollywood squares work if they've got capital.
That's right.
Ash,
Yeah.
you want to go? Yeah, thanks,
Yeah,
Mike.
keep going, Mike. Tell us what you're working on and finish any other thoughts, if you would.
Yeah, those are the things. Right now, we're just positioning ourselves within the different markets on our own hotels, concentrating on writing a book. You know, a lot of people, number one, say they didn't know individuals could own hotels. I don't know why we get that, because I think most of them are individuals. But people that I get on all the other podcasts are, why did I switch from multifamily to hotels? And, you know, that's a whole other story. So I'm pinning some thoughts down and kind of telling my thoughts on why I love hotels.
Great. That's great. They can use all the positive feedback and credible press they can get, right? So that's great.
Right.
Was there any, you know, that's exciting. And I know I was thinking right about you, Ashley, because I know you've got a lot of connections in that world as well as we do. And Jeff and I do as well in some of those investor pools that would be interested in that distress funds and any kind of, you know, those kind of funds in this environment is music to my ears as an old private equity guy. So we have plenty to talk about later. That's great. Who's next on our deal? Thanks for sharing. That's great. And I know we'll keep going.
Awesome. So right up next, we got Robert Whitelaw.
Hey, everybody. I may be the odd guy out on this one. I first started in real estate in 1988 as a realtor. Got my broker's license in the early 2000s. Started my podcast, Real Estate Realities, with the Rebel Broker in 2007 in January. And it started off really as a exercise in frustration on how real estate agents do their business and how they build their brand on metrics that really, I always thought buyers and sellers shouldn't care about. You know, I don't care if you sold 20 homes last year. I care about how well you sold them. So I've managed to piss off an awful lot of people in my industry. So I don't know how many people in this particular group might not be fans, which is fine. I got plenty of non-fans who love reaching out and expressing how much they despise me. Bring it on. In terms of stuff I'm currently most excited about, you know, it makes me remember Sun Tzu, right? Who said, in chaos, there is opportunity. And there is so much craziness going on right now. Someone mentioned the seller's market. Absolutely true. But in my local market, that also is hand in hand with a 53% drop in inventory. So, you know, that's the thing. It's sellers afraid to put their houses on the market because they'll get the COVID all over everything in the house. But what's interesting about that is we don't see at the same time the commensurate increase in sales price that I would expect given that level of drop and inventory, right? If you get down to the basics. So anyway, as I usually do, I tend to get into the weeds when it comes to data and real estate. And my goal here with my show is to really inform buyers, sellers, and investors on what do they need, what questions they need to ask, what are next steps, what's a reality check on the current real estate weather. I also do a monthly live chat on Facebook Live, call it Coffee and Real Estate, where we just chat about local real estate stuff. And over the course of the years, the podcast has taken many different forms, ranging from an anonymous one for the first 3 years, where all I went by was Rebel Broker, and I didn't say who I was because there was an awful lot of bitching going on in those first few years. Then finally revealed my name and actually went live with call-in people. So I did a 3-hour show on Saturdays where people could call in and ask questions. Then it evolved into a every day of the week show, which was unsustainable given the amount of clients I had. So I had to cut that back down. And now it's more of a once every week or two kind of a thing. So but very much gears on the ground, right? Strategies for folks that are out there looking right now. In terms of challenges I'm facing, I think it's very me centric, to be super honest. I'm looking for strategies for myself. I own a couple of investment properties that are vacation rentals, just because anyone who's done the math on those knows that the return on investment on a month-to-month basis tends to be a lot better. It might be a little bit more sensitive to other things going on, but that's kind of been my focus. And I'm looking to broaden that over the next couple of years, get into some more multifamily. And I'm like that maid that is excellent at keeping your house clean, but her house is a mess. I'm great at telling you how to find the great deal and help you get the great deal and do the right analysis. But if I took my own advice, I would be a far better example to others in terms of what to hold in the world of real estate. But that pretty much sums it up. And I'm glad to be here. This is the very first mastermind I've actually accepted the invite to. So don't know what to say about that.
We're glad to have you. And like I say, your insights personally, and I know the rest of the group too, would, as we go along here a little further, love to hear some of your thoughts and I don't want to call them predictions, but trends that you are spotting and putting your 2 cents in on as we go along. So Robert, believe me, this is a free form type of forum, and we're going to be able to share ideas and resources and, like I say, thoughts and hopefully make some good short and long-term connections with quality projects people and all of that, and continue to expand that. So we appreciate you being part of this.
You bet. Sounds good.
Yeah, you're welcome. Eddie,
Thanks.
who do we have next?
Awesome. Thank you so much for sharing, Robert. Right up next, we got Ashley Tison.
Oh no, don't bring him on, Eddie, please.
Don't bring him on, skip him.
Kill the feed. The attorneys, oh my gosh. Well, I guess it's too late to stop him. So anyway, without further
That's out of
ado,
the bag, man. You guys threw out a lawyer's name.
Yeah.
That's all, So
we tried to hold him back, but it's impossible.
Give
us some updates.
I do not have a podcast yet. Jimmy and I are kind of talking about that, and we've bounced it around about how we could kind of peel that one off and maybe have a little bit of an offshoot of the Opportunity Zones podcast, and maybe one that actually handles lawyer type stuff that I hit on the strategy calls that I do for people for Opportunity Zones. But I am a commercial real estate and mergers and acquisitions attorney. And I specifically help business owners put more money in their pocket when they're going to sell their business. And I found out about Opportunity Zones, and that is hands down, bar none, the best legislative creation to generate generational wealth that Congress has ever passed. And so I jumped in with both feet and got teamed up with Jimmy so that we can democratize Opportunity Zones for everybody out there that is doing real estate deals. And so we put together a process about how we do that and how we try to serve them with both information and resources to actually make it happen. And so that's kind of morphed into almost like a full service advisory firm, to where we're helping individuals, but we're also helping bigger funds, kind of process through it, all the way to, local municipalities. We had a session today where we educated the municipalities about how to do it. So what we're working on right now is a market network for folks that are wanting to do Opportunity Zones and to be involved in that. And I think that ultimately that'll probably morph into more of a market network of people that hate paying taxes. And Opportunity Zones will be one of the tools that will be there, but we kind of run the gamut. So I have a lot of stuff in my toolbox that I can pull out to help people save taxes. Opportunity Zones happen to be the hottest one that gets the most buzz right now. But I also do key employee retention plans. I do deferred sales trusts. We do some restricted property trusts for life insurance as well, and some kind of just cool cutting edge stuff to reduce people's taxes. We also have a solar investment that gives people, basically they can get all their money in tax savings back year one, and they get a 4%, return on their money from there on out. So I'm actually interested in becoming a podcast, almost a professional podcast guest, to where I can come in and, and help podcasters with a product and a package that that we can do through our process that turns them on to these types of tax savings plans. So that's what I'm working on right now.
Yeah. Ashley, I just want to put you on a spot real quick, but I tell you, he's, we've partnered up at Crowdcreate with he and Jimmy at OZ Pros. It's been an incredibly productive and educational partnership, profitable as well. So I enjoy, Ashley is just a fountain of updated information too, and credible strategies to really move your project ahead. So my hat's off to him. I kid him a lot because like welcome back Cotter for you old guys. I kid him a lot because we love him a lot, and he's profitable. So you know how much I really like him. But give us some tidbits, Ashley, on some things you see latest and greatest coming on the tax front, or we've got the election coming up. We've got a lot of local elections coming up in different segments. Give us your lay of the landscape here to kind of kick us off on your viewpoints.
A lot of it's going to depend on if we see a blue wave or not, and preliminary results on, early voting, certainly in North Carolina, has indicated that the Republicans are showing out even more than the Democrats. And the Democrats have, they've historically owned early voting. And so the Republicans typically win in the general, the Democrats have the early voting, and that's not the case here in North Carolina. And so it'll be interesting to see what ends up happening, with the ultimate result. Assuming that, let's play that doesn't happen and that we get, Biden in, and maybe even to lose the Senate, which once again, I think that's doubtful because of, the situation that Cal Cunningham finds himself in. I actually went to law school with him, and it couldn't happen to a nicer guy. And anyhow, so I think that the Republicans will keep the Senate, but if they didn't, a blue wave would see us with a massive increase relative to capital gains, and also elimination. They're talking about repealing the Tax Cut and Jobs Act. They are not going to touch opportunity zones, or if they do, they will make it so that there's more impact required. But Biden's going to be all over that to try and make it his program now, because it was originally a Democrat program, and Trump was just really good at taking credit for it. I think that the other play that that we'll see inside of that is that that there will be opportunities inside of like the green energy space standpoint, and from an investment standpoint that will just cycle, right? So I think it was Robert that was talking about that, the confusion breeds opportunity. And so with an administration change, that would create opportunity in and of itself. It'll be interesting to see what happens to the economy, but I mean, that's kind of anyone's guess.
Yeah, that's great, Ashley. Thank you very much. And like I say, he's a great resource, and so urge you to keep in touch with him as well, everybody. So I guess, Eddie, is that our last contestant or guest?
No, we got a few more. So
okay, good. You keep going then. I can't see him. You can.
Right. Up next, we got Gino Barbaro.
Hey, everybody.
Wow.
Hey, what's going on, Gino?
We can't forget an Italian, right, Gino? You might get, you might send Guido out for us or something. So.
Well, I forecasted. I was in New Yorker 3 years ago. I left New York because I knew COVID was coming, and we're talking about numbers and all this. The demographics that are pointing. I'm in the multifamily space, and the migratory patterns. I moved to Florida 3 years ago, and I think that's just only going to accelerate. It's just amazing. I got lucky getting the multifamily space. I bought my first asset with my partner, Jake. We're the co-founders of Jake and Gino back in 2013. We bought our first 1,000 units by ourselves. The next 600 we've been able to syndicate. I've got 6 kids, really proud of that. Wow. And, one of the things I see what's going on is it's confusing the whole space right now. I think multifamily, I tell you guys, it's a basic human need. It's food, clothing, and shelter, basically, if you think about it, right? And I think right now, the millennials are tapped out. The baby boomers are going to RVs and downsizing. So I think the single family space, we're at a 50-year home ownership low. I like my space. The only problem, the struggle that I'm having is that these assets at 100 units plus are not penciling out because you have so much money. I mean, A-Rod bid on an asset in South Carolina in Greenville. He paid 90 something a door. We were at 78 a door and we overpaid. So there's a lot of money chasing yield. And that's my struggle. And I think that's what a lot of owners out there are. We just closed on a 50 unit deal 3 months ago, 52 unit deal 5 months ago. So these smaller assets are great because they're the mom and pops. The institutions don't want them. And the investors can't take them down because they're a little too big. So for me, that's the struggle. I mean, there's a lot of money out there, and I don't know if people realize that, but you've got billions swirling and they're chasing yield. And multifamily, I think, is the gold, really, because you can buy gold and sit gold and it doesn't give you a yield. You buy multifamily, it's you're hedging against inflation. You got all this money printing out. It's an asset that's elevating, and you have yield at the same time, and it's a basic human need. So going forward, I think there's gonna be a demand for it. I think people are gonna be renting. I think, like I said, not many guys out there having 6 kids. You start families older. You have that $1.9 trillion in student debt. A lot of those factors. So I'm bullish on the asset. I love it. This is what I do. I just don't see anything shaking out. We were told back in March and April that collections were going to drop precipitously.
Yeah.
But did we know that $3 trillion was going to pump in, and now they're fighting about another $2 trillion being in? So they've elevated. I'm just worried that you have some people coming in and saying, hey, rent collections, we're going to give rent free. I mean, that's one thing I'm worried about. So I don't know if that will ever happen. I mean, I'm just hoping that doesn't happen. So what are we working on? I'm working on the Jake and Gino platform. We started the educational platform about 4 years ago. Our students have closed over 10,000 units. Really proud about that. We have 4 podcasts. We have the Jake and Gino podcast. We have a podcast called The Multifamily Zone. I do it with my wife, and I love it because it's about spousal communication. And it's amazing how business and family just correlate, talking about core values and mission statement and communication. So I love doing that podcast. And then we have a podcast called The Movers and Shakers, where we highlight our students, having students come on and say, hey, how did you start? How did you buy that first deal? It's all about that. And then we have another podcast called the Rant CRE, which focuses on syndications. How do you start syndications? How do you take them down? We got guys talking about DSTs on there. So it's just, I love the podcast space. I started about 5 years ago, and it's just really, sharing stories and just trying to motivate and inspire people. And I'm not a prognosticator. I don't know what's going to happen in the future. You can just see what's going on now, and the data is the data, but it does move and it does change. And I think what government does affects things so much. And I think we can't overestimate that. Because I remember, like I said, guys, back in March, watching Grant Cardone telling me that he's firing everybody and the world is ending. And then April comes, 98% collections. May, 98%. June, 96%. One thing I would stress is worry about what market you're in. We're in Tennessee. We're vertically integrated. So we manage and we own our own properties. There are people moving to Knoxville, Tennessee, and moving to Nashville. So we're actually back to rent growth. We're actually raising rents right now. So if you are in a area where the migrations are coming out of, and not to pick on the blue states, this is not politics. This is just policy. It's the reality. When San Francisco has a 13% state income tax and Dallas, Texas has 0 and Florida has 0, where are you going? Or when Stripe says to you, listen, 10%, I'll give you a 10% pay cut. You can go anywhere and live anywhere. Where are you going? You're going to Dallas, Texas. And that migration is massive. You just have to watch where the migratory patterns are flowing or where the cash is flowing. So that's something I think we should all really be cognizant of going forward in the next 6 to 12 months.
Wow.
Gino, 98% collections. That's impressive because
what we started doing is we were doing a daily tracker. So I mean, like first in April, it was amazing. I mean, April was just unbelievable. So our economic occupancy right now, overall, believe it or not, in the Louisville, we have 2 assets in Louisville, dipped in Louisville. I mean, I'm not going to say it's a Democratic governor, but it's a different kind of area where they're talking about eviction moratoriums, and they're just saying, you know what, you don't have to pay, but it's a moratorium. Come January, the rent is due. And it's just a different way when you're talking to the population. Whereas in Tennessee, we have no problems collecting rent in Tennessee. We're actually, like I said, we're actually back to a growth phase because there's lack of housing there. When multifamily is all about jobs, it's really about jobs coming into the area, and it's about the different types of employers in there. And when you look at that, I mean, you look in the Southeast, my partner says the SEC, the Southeast Conference. That's what it comes down to. Look at all the other areas like a Phoenix, like a Salt Lake City, like a Boise, Idaho, like Nevada, Reno. They're all booming because they're leaving California. That's the issue. So I think it's just something really important that we need to think of going forward.
Gino, what's the biggest driver of growth in those areas? So we're in Southern California, and going to Phoenix and Vegas, it's e-commerce. And so a lot of these fulfillment centers for Amazon has been our biggest driver. For you in Tennessee, though, what has been? Is FedEx out there?
No, they're in Memphis. So let's look at Nashville. Nashville's a sexy market. You have the music industry, right? You have a lot of it's just a beautiful city. You can actually expand. You have what we call, I don't know if any of you ever read the book Big Shifts Ahead by Chris Porter. We did a podcast with him, and he coins the term suburban. It's suburban urban living, where you can be in the core of Nashville and within 15 minutes you're out in the suburbs, and it's just it's a different way of living, right? And it's just something that people want. The millennials want that mixed use where they can go downstairs, have their Starbucks, go to Whole Foods, and yet live in an apartment. And here at the end of the year, give your key. And I don't know what's going to happen with this telecommuting, with people living at home. I don't know if that's going to continue, because people say they're really productive at home. That's a bunch of crap for a lot of people. They're not as productive. They're just more, they can be in their underwear every day, right? That's the, I don't know how that the trend is going to
naked from the waist down, by the way. I don't want to shock anybody.
Yeah, Gino, keep your camera up, please.
Can I stand up? A little something.
You too, but I'm just saying, it's one of those things where you have the tax. Like I said, Tennessee has no state income tax. So, and the cost of living is a lot cheaper. So look at the cost of living. Also, you're not leaving Southern California just for taxes, but an employer can move his whole factory to Dallas. The cost of living is 60% of what it costs. So they can buy a home for $400,000 in Dallas that would cost $1 million in California. So there's coming a point, a threshold, where the millionaires in California are getting pissed off. When people making $3, $4, $5 million a year didn't have to care a couple of years ago because they made enough money, but now it's coming down to a point of almost theft.
Yeah. So you know what? Gino's making an awesome point here that I actually brought up on my last podcast, where there's two things that play into that. I don't know how much we want to get into gears here, but like as somebody who's done real estate since '88, it used to be about 20% of people were moving out of state and 80% were moving somewhere else in the state. Mm-hmm. Completely the opposite now. Over the last 2 years, 80% of the people whose homes I have sold have been moving out of the state, whether it's Boise, or anywhere, somewhere in Idaho, somewhere in Nevada, somewhere in Texas, wherever, or Colorado. That's absolutely a thing. Plus, blend into that, over 50% of residents surveyed in California said, if I could move out, I would.
That's crazy. 50%. That's
well,
20
and it gets
million
crazier.
People.
So our Prop 15 is about increasing taxes on commercial properties, and they like to make it sound like it's only going to affect those rich folks that we need to hate so much. But those rich folks are renting those commercial spaces to other people, and they're not going to eat that cost.
Right.
Plus, they're talking about adding a luxury tax in California if you make over X amount of dollars. They are doing everything they can to get people to jump ship.
Yeah, Robert, you're exactly right. And Gino, to your effect, just from my point of view, there's going to be such a bad afterglow, regardless of who gets in office and what goes on with the local politicians. The money is, even with the grants, let's say the Dems get in and they get a bunch of grant money to the states, the blue states and stuff like that, they are going to really still be a big shortfall. So there's going to come down on the people that are left that own businesses, homes, make over, $400K, which is really not that much money in California. Let's face it. Yeah. I mean, you've got to make, well, anyway, but you get my drift. So,
yeah. And the final piece of this puzzle is brain drain, right? A lot of reasons why companies would not leave Silicon Valley, which is obviously my stomping ground.
Great point.
Yeah. They were afraid they'd lose 60% of their people when they go to Texas. A lot of people don't know this, but Apple was looking to leave California in 1992, and they were going to choose between Texas, Colorado, and one other place. I think it was Phoenix. Cupertino, where they're based, gave them ridiculous concessions, all kinds of tax breaks. So they stayed, but they still moved all of their technical support to Austin.
Yep.
Just left the corporate headquarters and research and development in Cupertino.
That is so insane.
That was back when only 10% of the people in the state said, I'd be willing to leave. I'm done with California. Now it's over 50%. Wow. What do you think that means when someone can say, I'm only going to reduce your income, your pay by 5 or 10%, or maybe not at all, as I've heard some folks are doing, but I'm going to reduce your cost of living by 50%.
So, Robert, to your point, that's why the Raleigh, North Carolina, that's why the Boise, Idaho, that's why the Salt Lake City. These are all little mini tech booms. When you get people together, they look for jobs. That was the attraction 30 years ago. You go to New York City, you have an educated workforce. Well, over across the United States, that's happening in Reno, Nevada, and other cities that I've mentioned. And that's what's going on. So if you can figure out one of those emerging markets and plant your flag there, you're ahead of the curve. You're always trying to beat the flow of capital.
How do you feel about Chattanooga? with their fiber.
The problem with Chattanooga is it's the airport. The airport is not a big resource. It's like Jacksonville, Florida. You fly into Nashville, it's a great resource. Charlotte is an amazing airport. Atlanta, you look at these airports that have great hubs. You want to get people in. The problem with Jacksonville, I moved here 3 years ago. It's been a massive boom, but their airport, their infrastructure is not there yet. They will get there. If they're smart enough, they will. But that's one of the things I look for in an emerging city. Chattanooga is about the size of Knoxville. It's a beautiful city, nice. I think it's a little overpriced, but I think that there is future growth there for sure.
Right. Well, infrastructure bill is coming, guys, one way or another. So I know something's going to get passed in probably first or second quarter. So maybe it'll help some of those features as well. But Eddie, let's thanks for that, Gino. That's great.
Actually, maybe it's a good segue. Dr. Gower, are you there? Dr. Adam Gower with Gower Crowd.
Yeah.
I know
can you hear me?
Yeah. I'd actually love to hear from you because I know you interview a lot of syndication, syndicators on your podcast, and love to hear your take on this. Where the capital?
Yes. My take on what exactly?
On syndications for even multifamily and this shift from the coastal states, California, San Francisco, and how even real estate syndicators are raising capital for their projects and trying to.
Yeah. So I think that the migration is, probably in its early stages. All right. There's still, it takes a lot to up and move. Right? It's easy enough to say it. But the reality is that to actually up and move somewhere, even in the same city, is not a trivial thing. So by the time the real momentum for that kicks in, I can imagine that the world will look a bit different. So there's a lot of the major shifts at the moment were, look, the world that I live in is very much online syndication. That's all I do. I build systems for sponsors so they can raise money online. And the biggest shift that I've seen as a result of the macroeconomic events of today is the migration to exactly what we're doing right now, which is communication remotely. And so that was something that for commercial real estate sponsors, first of all, was absolutely brand new, right? So you got guys like Gino over here, who's a master at it, raising money online. But for most people, it's absolutely brand new. The idea of raising money on this device is anathema for somebody like me and Will over there, right? He's got the gray heads amongst us.
Thanks a lot, Adam. Go ahead.
Right, and dialing for dollars, for crying out loud. And going to actual meetings. Well, 99% of sponsors, that's all they do still. And so the movement to digital media, to communicating online, to consuming anything and everything using a device like this, including investing online, was a trend that started in 2012 when the Jobs Act was passed, kicked in 2014 when the laws were promulgated, and has slowly been developing over the last few years, but now is exploding in growth because everybody is forced to work remotely, right? So suddenly you have this incredible opportunity to really capitalize on macroeconomic shifts that, would have taken a decade had we not all been sent home, right, to work. So that's kind of my take. Slightly different maybe, but that's the world that I live in. And you don't have to stop me. I mean, I can keep talking for hours. I'm like hyper caffeinated and about my favorite subject. So I'm good to go, whatever you want.
A question about syndication. So when you think about somebody that's typically, and Robert, you kind of touched on the people that typically invest in their 401k in the stock market. What prevents somebody from investing into a real estate syndicated deal that you hear of when?
What prevents them? Lack of knowledge to start with. So we just actually finished a very detailed investor survey, actually. We sent out a survey to about 40,000 investors. And we did some high level, I did some personal interviews as well. And anecdotally, The primary barrier is lack of knowledge, right? So people, they know they want to be in real estate. They're interested in real estate. They have experience in stocks and bonds and have done all their careers, but they haven't had access. It's remarkable, you know, for people like us who are all online right now, it seems unlike, how would you not know that you can invest, you know, $10 in real estate, right? Or even 25,000, whatever. It's like, does nobody not know that yet? Well, actually, yes, there's a vast number of people who have no clue.
I'm one of them, Adam, by the way. I didn't know about that.
About what?
That you can invest to 25,000 or $10. That's pretty interesting.
Seriously? You see that? Isn't that just amazing? I think that so I have a 9-year-old and he likes to do this when he hears things like
that's just me right now. So
right. So, but the world has changed. Now you can invest these tiny amounts of money incrementally, or you can invest 10,000, 25,000. It's really absolutely amazing.
Robin Hood strikes again in all facets.
Yeah, but it's exactly. And what's fascinating is that most people. So you're probably on a different side of it. Adil, is that how I pronounce your name? Adil? Yeah. But for, you know, from an investor's perspective, you know, we just raised 20 million on a deal, and we had some people actually invested from Facebook within days. Just think about that for a minute. They're there cruising, looking at happy cat videos, and an ad pops up that says, hey, invest 25 grand in real estate. And they click, okay, and then they click again and wire 25 grand. It's like, is that incredible? There's a bit more to it than that, obviously, but that's how it works. Now, for most people, though, the barrier, to answer your question, Jeffrey, unless it's Jeff. Do you go by Jeff or Jeff?
Jeffrey's easier just because it says on my.
So to answer your question, most people's, the barrier to entry, or the first barrier, is lack of knowledge. So the first thing they want to know is, like, wow, I can invest 25 grand. I thought I needed $1 million to do that. So they start doing research. They research online. They get really deep into understanding and trying to understand all the terms of art, all the terms that we know, IRR, cap rate, you name it, right? Equity multiple, whatever it happens to be, they start learning that. And then they take the first step and they make a small investment somewhere to see how it works. And once they do that, as you all know, in digital marketing, in direct marketing of any sort, if you get somebody to buy anything, no matter how small, they are 10 times more likely to buy something 10 times bigger later, right? So they take a first step in, they make a little investment, they see how it goes, and then they get the bug and they invest more. But it's all about education. So to clear that barrier, all of us, that's what we do, right? Our podcasts, that's what our podcasts are all about, right? I see Ashley smiling over there. He knows it.
I'm pulling out my credit card to buy your book right now for $7.
Please do.
Shameless.
Yeah, shameless. Actually, you know what? Being the brilliant marketer that I am, right? I managed to publish 2 books in the same bloody week.
There you go.
There we go. Are you going to throw the second one in for free?
Huh? No, nothing's for free. But the book, the $7 book, comes with a free video training. So be sure to watch that.
I gotta get that now.
Wait, there's more.
Do. Money back guarantee.
How much for the autographed copy, Adam? We need the autograph in there if we're going to promote it here on our web.
I'll tell you what, I'll be glad. You guys did a nice thing putting this together. It's really cool. Actually, I'm sorry I didn't think of it first, but the fact that you guys are, I'm going to claim to have thought of it and mentioned it to you, just so you know. But the fact, the idea of pulling podcasters together, it's a really cool idea. Really.
Well, you can thank Jeff.
I'll send you one, Will. I'll send me your address and I'll send you one. It just came out, this one. The other one I can't give you autograph because it's digital.
That's all right. But thank Jeffrey. We can all thank Jeffrey for the vision to put the podcasters on and combine them. We're part of his team, and you know, he has a great mindset for moving things forward and educating and giving value first. which we all know is the coin of the realm for attracting and sustaining any partnership.
Yeah, thanks, Dr. I just the way that trust is transacted digitally now. I mean, if you're getting really into like the meta of it, it's I have a lot of respect for podcasters because you think that it's just one ad, but it's all the content that you've built over the last couple of years. But I've never met you, but I've listened to a ton of your episodes. I've actually never met Gino, and I've listened to a ton of his episodes. And for everybody on here, it's like it's a pleasure to actually speak with you. And same with Jimmy. And hats off to Jimmy that he's having his pitch day, but you've built this over years, and it is the future. And you even think about the millennial generation. I went to college with Ivan, who's actually on this call, and we have a lot of friends that previously with Facebook, Coinbase, the tech companies, and they make a lot of money, like $300,000 to $400,000 is their annual salary, and now they have the chance to move, and they're moving to those states, Oregon, whatnot. They still haven't invested in real estate, but the millennial generation compared to the older, I mean, what is the statistic that millennials actually only own 4% of the wealth? There's a big wealth gap.
I totally don't buy that. This is why. So millennials, their parents are boomers, right? They're going to inherit boomer wealth. So you target millennials today with a really small buy-in. I'll tell you who did this very, very well. They're struggling a bit now, but rich uncles, brilliant. I interviewed Harold Hof on my podcast. They $10, you can buy in for $10. I said, why don't you just give away a $10 bloody share? Right? And then start communicating. You can't do that on Facebook, but
have you met Dilip? He was one of the early tech founders that built that platform at Rich Uncles, who's on this.
Yes, that's right. They actually, Ray Wirtz is his partner. I've got them all here, props. They just scatter my desk. My earliest book, one of my earlier books. This one, actually, Ray Wirtz endorsed. But they target the millennials.
Absolutely. Absolutely, Adam. The oldest thing from raising money and investments from the private equity side and everything else was send something back. Whether you're dealing with a $50 million investor, institutional investor, or a small retail investor, if they decide to put their trust in you and their money, and you're sending something back, whether it's in a residual or a dividend or a return or anything, even in communication, regular communication. In the old days, of course, it was newsletters and conference calls and all that stuff. You own them, and you're right, they're going to inherit the earth. So once again, the trust factor, and you've already sent them something back, even if it's $2 on $10, they're going to absolutely come forward. And when they do control that wealth, God protect you, because it's coming.
That's right.
In that vein. So your fishing or harvesting strategy for me is music to my ears.
Long-term perspective. It works for everything, especially real estate.
We are coming up on time. I just want to introduce Jason Hartman, who just joined in. And Jason, welcome to the Mastermind. And we're just going around introducing ourselves, kind of share what you're excited about, what you're working on, and if there's anything we can do to help. You might see some familiar faces on here.
Sure. Do you want me to go now?
Yeah.
Okay. And is this working?
Yep.
Okay, great.
Well, good, man.
Not sure the mic is on. It decides to go back and forth all the time. Anyway, great to see everybody. We help people invest nationwide and buy rental properties. And that's what we've been doing for the last 16 years and podcasting for the last 15 of those years. And love the medium. We've got about, 6,000 episodes out there or so now, and over 1,500 in our main show, the Creating Wealth Show, which is the first and most popular of the shows. So
Jason, can you move closer to the mic or speak up a little bit? It's a little low.
Sure. Yeah, sorry about that. That adjustment on Zoom, it constantly resets itself. It drives me nuts.
It's really annoying, isn't it?
Yeah, you guys have that too, right?
Yes.
See, I'm talking to a bunch of people that know audio here.
It's really annoying.
Okay. So
yeah, Zoom's the worst for that. You got to run through a setup every time.
I know. It's just
there is a way of adjusting it, but it's a pain to have to, and to remember to do it is a pain. Anyway, go on, Jason. Go on.
So I'm putting suppress background noise at a low suppression. So does that make me louder?
Yeah, you sound good now.
Okay, all right. Anyway, hopefully it'll stick next time I log on. But yeah, right now we're working on a bunch of things, like I'm sure all of you are, and one of them is a course we call Pandemic Investing. We've presented it a few times. A lot of people seem very interested. Crazy times we're living in. Yeah. And,
that's great. What's
that's about it. I don't know how much you want me to talk, but
yeah, what's the pandemic webinar, whatever it is, going to cover? Tell me what themes or what your process is there.
There's a lot to it, Will, because obviously it's a big topic, but mostly we cover the 6 major trends I've identified that are really reshaping the economy and real estate. Of course, the mass migration out of cities to suburban and rural even living, and intergenerational living, and just a bunch of these trends that are just reshaping everything. This move toward digital currency that's happening, and a lot of things changing. And when you go thumbs up like that, I'm guessing you're a Bitcoin fan, right?
I'm scared to show my face, but as PayPal just adopted it yesterday with their $300 million users for Venmo, I'm showing my face as a Bitcoin advocate. But
really, oh, good stuff. Wow. Well, listen, I have another small podcast I've been hosting for a while called the Cryptocast, and I just want to start off by saying I would love to be absolutely 100% wrong about this. But I think the cryptocurrency that's going to win is the one backed by the central bank and the government. It's going to be the digital dollar or whatever it's called. But I would love to be wrong. I hope Bitcoin wins because,
Well, we're doing a podcast next week, Tuesday at 12 noon Pacific, and that's would love to have you join in on that as well, on blockchain and crypto and gaming. So if you have a chance, we'd love to invite you.
Yeah,
but go ahead, keep going, Jason, on the pandemic theme, because that covers a lot of ground, and certainly I think it's on everybody's mind, from real estate to digital currency.
Yeah, it definitely is. Well, would love to be involved, so just send me the info or whatever, and I'll see if I can join you.
Yeah, sounds good. And I will connect everybody after this, and feel free to just reach out to everybody, and hopefully you can all just build relationships and be of value. Last one that joined was Jermaine Evans. He runs a RE Mentor. Jermaine, you don't mind giving an introduction, and thanks for joining us. Is Jermaine there? Oh, if not, I don't know, any last topics that anybody wants to discuss before we wrap up? That
I would love to find out what Gino's camera setup is and Robert Whitelaw's camera setup is. I love the look that your camera is given. I want to know what you guys are using. Is it a DSLR that you've plugged in, or what do you have there exactly?
It is a Sony A6400.
How about you, Robert?
I will see that and raise it to a Sony A6600.
Nice. Okay.
Well, he's been
I've
around
also
since
got
88,
some
so.
panel lights and a couple other.
And that's what gives
cool
it the fuzzy background.
Yeah. So,
yes.
And the only thing you need to focus on in that is the aperture of your camera, right? So the lower the number aperture on your camera, the more fuzziness in the back you'll get.
So, my favorite is actually my 9-year-old I told you about before. This is what he introduced me to.
There you go.
I love these filters.
He thinks you're an angel.
Yeah.
We plan to keep this this series going, and certainly if eventually get into a weekly type of format. So we do appreciate everybody. I'm not ending it, but I just want to say we appreciate everybody contributing and want to keep it going and growing. And so if you have other guests you think would be of interest or interested, then we'd love to have them on as well, and keep this kind of growing to at least 30 plus invited guests, that type of thing. And I think we can really create something that's hopefully beneficial and profitable to everyone. So want everybody's feedback. Appreciate it.
You know who really wants to meet you is a lot of VCs and family offices. They're very interested in podcasters and the influence you have on the market. So I know some of you are also, syndicating these deals, but we've seen it in crypto. Anthony Pompliano is very famous for taking this concept, and then he partnered with somebody that now runs his fund. But all of you have built up your audience and the the episodes that you've put in. But yeah, maybe in a future, masterminds, are all welcome to join. Let us know who you'd like to meet. But we plan on having a family office and also VC mastermind where hopefully you can just meet and connect with people that run, big balance sheets and they're looking to deploy capital. And
that's great. Yeah, that's excellent, Jeff. You guys are the new influencers, celebrities, influencers, whatever you want to call it. And we get so many people, even old people that come through me that are CEOs and hedge fund managers and VCs and investors, top line investors, that type of thing. And they really want to understand and harness this new influencer world and also online world, like some of you were talking about. I think it was you, Adam, mainly, but others too. So these are the kind of introductions we can make and start to integrate for all of you to build, credibility, awareness, relationships, and certainly access to capital that can expand all of our worlds. And we'd certainly love to have that opportunity. So stay tuned.
Yeah,
we're going to keep that moving forward.
Thanks again for putting
help.
this together. Yeah, really cool.
Yeah, this was great.
Hey, you guys, I don't know if this is the appropriate thing, but I just thought I'd throw it out there since I'm talking with a bunch of pros here. Has anybody done like 2 camera shoots? I know I heard that you can do this with Zoom, and I think it would be really cool to take the Zoom, that we're all doing all the time now, or live streams. Like we use StreamYard for that, and really kind of up the game a little bit with, like 2 cameras, one slightly off to the side or something. Is anybody doing that yet?
That's Robert right there.
Robert is.
Yeah, OBS Studio.
You're showing off. See, you're showing. You didn't say yes. You just showed me.
I'm modeling. I'm trying to model the behavior that you're looking for.
Can you make that automatic, Robert? Or where it just kind of switches back and forth every once in a while?
So there's like several answers to that question, ranging from something you can do for free, assuming you already have multiple cameras, to something that's going to have like a cool little bunch of buttons to one side where you hit it and it goes to different setups.
Yeah. Like I have a Stream Deck. I just haven't hooked it
up.
Oh,
okay.
Yet.
That's exactly what I was going to say. Get yourself a Stream Deck and maybe use Streamlabs or OBS, which is a free tool that you can use. And then those will both let you output as video to other things. So you can have overlays, you can have different scenes that you've set up, and you can just switch those back and forth using the deck.
Jason,
oh, sorry, go ahead.
I've got a great recommendation for you guys. So I found this 19-year-old in San Francisco technical kid on Fiverr, and he set up my full OBS studio and he configured it. I only paid him $15.
Wow.
Great kid. I highly recommend him. Whatever virtual setup you want on cameras and even OBS Studio, he's phenomenal and great.
Oh, please, can you give me his info?
I put the link here in the Zoom chat. I highly recommend this.
OBS Studio is freaking amazing. And Streamlabs, depending on whichever one that you prefer. If you want to go with Streamlabs and pay for their Prime thing, you've got a ton of different themes that you can use in terms of great animations if you're doing a live stream, or if you want to just do a really cool overlay stream to things like Zoom. But you can actually turn those into outputting a video that is seen as a camera by these other things. So it gives you another level of control that's pretty crazy.
That's awesome. We're using
if you don't have a deck, for anyone else who's interested in doing the same thing, if you do have an iPad or an iPhone, you can download the Streamlabs app for it and link it up to your thing. So it'll automatically on the fly switch. It'll give you basically virtual buttons on your iPad to do the same thing.
If we're using StreamYard, which we are using for that, is that's in the same category as OBS Studio, right? Or do you need both?
I don't know what StreamYard is.
Okay.
So I can't answer that question, but I would imagine if it's looking to compete with other things on the market that don't cost money, I would imagine it's going to be something that they're going to offer.
We pay $50 a month for StreamYard, and it competes with Restream.io.
Okay.
And we chose StreamYard, but I guess OBS is like another layer you can put on, right? Beyond.
So
that.
Restream is think of it as a one-to-many thing, right? You're feeding one stream into Restream.io, and then it's spitting it out to Twitch, Facebook, YouTube, whatever else, right? And it's doing it so that you're not impacted by your local bandwidth, so that you're able to do one video stream out, but have multiple video streams that come out of your Restream or whatever other service you're using.
That's impressive. How long have they been around, Robert? Or how
Which
long
one?
has that been active? The one you just described, where it could feed into
OBS?
so many channels.
Restream. Restream's been around for a while. Restream, if I'm not mistaken, was like one of the first players on that market.
Yeah. And we just started doing all of the podcast intros as a live stream. And then we just take that and podcast it. And, you know, are you guys all doing YouTube? Because I missed that whole thing.
Hell yeah.
And
Yeah, I'm doing it now.
And we're doing
My podcast is now a pod/vidcast, and it's actually delayed my production because I have to edit the videos for YouTube.
Yeah, yeah. But YouTube is a great.
What do you think, Adam? Have they missed the boat?
Yeah, we actually create about 20 pieces of content approximately from every podcast. So we create short videos, we create articles, we create sound bites, we create all kinds of things, and they all go into social media on auto rotate, pointing back to the website. So we have.
See, I went the other way.
Philosophy.
I shortened my podcasts to fit the format of YouTube, and I should have stuck with the longer format podcast and chopped it into pieces.
Yeah, the thing is though that YouTube prefers longer format because they rate you based on the amount of minutes watched. So you're better off having longer ones and shorter ones.
Yeah.
But be sure to SEO optimize all of them. That will drive traffic. And we've actually also found that doing just a silly, miserly amount of advertising every day on YouTube also jacks up minutes watched. It's well worth it. Yeah.
Okay.
Content, we call it content factoring.
See, I'm walking away with value already.
Yeah, this is great. And when you Adam,
tell them where you got it, Robert.
That's right.
I'm keeping this one secret. You kidding me?
Yeah, Adam, when you do the advertising on YouTube, are you talking about like 15 or 30-second pre-rolls that you
So I just recorded a silly ad yesterday. I got to about 17 seconds and was done, and then realized it was a bit short. So I added another 45 seconds or so. So the video ad, all we did with the video ads originally to test it was just grab one of the more popular short videos that I'd produced and use that as the ad, and then just redirected back, subscribe to the site. Now I'm trying to sell the book. So I've created I cut a video yesterday that just sells the book, and that's a minute long. But you want to create a short video, but here's the thing, Jason. 60, how many did you say? 16,000, some ridiculous number.
6,000, not 16, but it's still ridiculous.
Oh no, only 6,000, right? So you can probably just get those transcribed and take a look, grab a few sound bites from those of something intelligent that you've said. I find that really hard to find in mine. I have to, my stuff really struggle with that. But if you find something just short, put a nice frame on the beginning and a logo reveal on the end, and use that as your ad. I mean, you've got all the content already.
Value right away, value up front, and almost a testimonial from a value add standpoint, which is always the most powerful testimonial.
And even from a CRM standpoint, right? So I just updated all of the first 4 contacts someone gets through all of my CRM all have a video embedded in them. And I have found my response and buy-in rate quadrupled. None of the content of the letter changed. All I did was put a video at the top, and it completely blew the numbers out of the water.
At Crowdcreate, our 2-minute sizzle, 2 to 3 minute sizzle videos, we get 70 to 80% open rates, and it's unbelievable with very qualified top line investors, podcasters, influencers, yada yada. Yeah. It's amazing, even when we have relationships with lots of A-listers, I guess you'd call them in my old Hollywood days. So, it definitely works, Robert, definitely. And we'd love to make some tools for you guys too, being shameless, since everybody's shameless too. We think our sizzle videos and our targeted content are some of the best in the business, and we'd love to partner up with you guys on some projects and really make it hum.
Adam, do you know what the approximate range of what your cost per acquisition is if you run a Google or Facebook ad to an accredited investor and to get them to deposit or invest, say, 2,500,000? Do you have a range?
25,000. Yeah, it runs so we are converting at between 1,000 and 1,500 per investor. That's through advertising. But you got to think about it in terms. That's just the advertising. That doesn't include building the mousetrap and everything else that goes with it. So you got to build your mousetrap first before you start doing advertising. Otherwise, you're pissing money away.
What's your what would you say your average investment or check size is, Adam? I got to go on to another show here pretty soon. But
45,000. It is 45,000.
Okay.
That's incredible. That's an ATM machine right there for you.
But but you've got to think big. You've got to think long term, and that you've got to think about the lifetime value of an investor. It's not just the first.
Oh, I love you. Adam, where are you located? I'm going to have to come pitch a tent in your backyard somewhere.
I'm, gosh, I don't know. I don't really exist. I'm actually just AI.
He's under the witness protection program, guys.
I'm really, exactly. I'm really.
You and I need to thread up and let's keep because I believe in your way and have some ideas too that might even enhance it as well.
I'd love to do that.
Okay.
I wanted to get back to the previous topic about repurposing content and putting it on YouTube. Has anyone tried repurpose.io or maybe a similar service? I haven't tried it yet, but I'm thinking about it. It automatically converts your podcast into video format and you can publish it to YouTube and Facebook and elsewhere. If you don't have any actual video content, I think it just like uses a screenshot or the default.
I actually did that.
Episode.
And
Yeah, how did it work?
Very, very low. I used to take my podcast audio only. It would overlay a cool little jiggly line as I talked, and would do a little animation of different images. And the payoff in terms of just additional views or anything like that was not measurable. But once I went to actual video where I turn on the stupid video camera while I'm doing the podcast and then do the audio separate through Apple and everything else, and then do the video just to YouTube, that saw a pretty decent increase in the viewership.
Yeah. They're, just so you know, they use Headliner. Okay. Yeah. So they're an agency, right? So you can do Headliner yourself, or
we use Headliner. That's what we use.
Stuff. Yeah.
Headliner. Yeah.
I've seen Headliner before too.
Is integrated with Libsyn now. So there's sort of included basic Headliner, but it's only like $12 a month if you want to just get your own subscription. Yeah. And if you use Repurpose, you're going to pay them like, I don't know, $300-400 depending on what program, but of course it's a done for you thing. So.
Right. Got it. Okay. That makes sense. Thanks for your feedback. Appreciate it.
Sure.
Thanks, guys. I'm going to have to go. Jeff. Oh, he's gone. Jeffrey's gone as well. The host with the most has gone. Oh, no, there you are.
No, you just moved. Yeah. No worries. Well, thanks everyone for attending. Again, I'll connect everyone via email and looking forward to the next one with all of you. And good stuff.
Yeah, thank you, Jeffrey. This is fun, man.
Yeah.
I know.
Nice surprise, everybody. Nice meeting y'all.
Likewise.
Take care.